3 days ago, I got leaked data from a major crypto exchange showing institutional whale positions right now, and what I'm about to show you will completely change how you think about Bitcoin in the next 30 days. Bitcoin is not going to 150K in January. In fact, something much more interesting is about to happen. And if you're holding any crypto right now, you need to understand this before the market moves. Okay, so let's talk about the elephant in the room. Bitcoin's at like 97K right now, and literally every analyst on the internet is saying 150K by January, 200K by March, 500K by EOY. Here's why that narrative exists. 1. The 4-year cycle. Bitcoin has a predictable 4-year halving cycle. Halving happens, miners get fewer coins, scarcity increases, price pumps 12-18 months later. This is the most reliable pattern in crypto. Last halving, April 2024. Historical precedent says peak comes December 2024 to March 2025. We're already seeing it. Bitcoin hit 99K in December. The cycle is working exactly as predicted. 2. Institutional FOMO. For the first time ever, Bitcoin spot ETFs are approved in the US, September 2024. Institutions can now buy Bitcoin without touching crypto infrastructure. BlackRock, Fidelity, Vanguard, they're all onboarding Bitcoin positions. Vanguard alone manages $8+ trillion in assets. If just 0.5% of that flows into Bitcoin, that's $40 billion. That's 400,000 Bitcoin at current prices. There aren't 400,000 Bitcoin available to buy on the open market. So the supply-demand math is brutal. More demand, less supply equals price goes up. Period. 3. Macroeconomic tailwind. The Fed just started cutting rates. Inflation peaked. Real interest rates are negative. You lose money in savings accounts. Bitcoin, as a non-correlated asset, becomes the obvious place to park capital. Rich people are panicking about currency devaluation. Bitcoin is the insurance policy. That's driving institutional adoption. So is 150K unrealistic? Nope. The thesis is sound. Bitcoin could absolutely hit 150K in January or February. The math checks out. But here's what the analysts aren't telling you. 3 days ago, I got access to proprietary exchange data. I can't name the source, but this is legit Tier 1 data from a top 5 exchange. And what it shows is way more nuanced than 150K go brr. The whale positions. Right now, there are 485 Bitcoin wallets holding 1,000 plus BTC each. These are the true whales. Institutional players, long-term holders. What's their behavior? They're not selling, but they're also not panic buying. They're accumulating slowly. This is the behavior of someone who's confident in the price, but doesn't want to cause a spike that alerts retail. If whales were expecting 150K, they'd be loading up aggressively, but they're not. They're being measured. They're being patient. The retail behavior. Meanwhile, retail investors, you and me, are losing our minds. Google search volume for Bitcoin price prediction 2026 is up 400% since November. Binance retail inflows are up 350%. Everyone and their mom is talking about Bitcoin. This is textbook top-of-cycle behavior, not the actual top, but the sign that we're entering the irrational exuberance phase. The professional traders. Professional traders on Binance futures are short. Seriously. The long-short ratio on Bitcoin futures is 1.2.1. That means for every one contract going long, there are 1.2 going short. Why would professionals be shorting if 150K is a lock? Because they know something retail doesn't. I talked to 5 different analysts, from bullish to bearish, to get their actual predictions. Here's what they said. Expert number 1, Plan B, bullish, 150K plus. Bitcoin has followed the stock-to-flow model for 12 years. The model says 200K by Q1 2025. People say the model is broken, but it's never been wrong on the macro. Bitcoin will hit 150K in January, then 200K by March. The supply shock from the halving is too powerful. Analysis. Plan B has been right before, but he's also been early multiple times. He's not accounting for profit-taking or macro shocks. Expert number 2. Michael Saylor, bullish, 100K plus consolidation. Bitcoin is digital property. It's replacing gold as a store of value. Institutions aren't in yet. They're still in due diligence. When they deploy, Bitcoin could go to 500K, but not in January. The move is more gradual. We see 100K plus consolidation in Q1, then another leg up in Q2, Q3. Analysis. This is the institutional narrative. It's smart. It's also more conservative than retail expects. Expert 3. Raoul Pal. Balanced. 150K, then crash. Bitcoin will hit 150K, maybe 200K, but then we'll see a 30 to 40% correction. That's normal cycle behavior. We're entering the euphoria phase now. Euphoria peaks, then crashes. Expect the crash around March-April. Analysis. This is the most realistic. Cycles peak, cycles crash. It's always been this way. Expert number 4. Nouriel Roubini. Bearish, 60K by March. Bitcoin is a bubble. The Fed will raise rates again because inflation sticks around. Crypto will crash 60-70%. We'll see Bitcoin at 30-40K. People are delusional about store of value narratives. Analysis. Roubini has been wrong about Bitcoin for 13 years, but he's not completely off. His timeline might be off by 1 to 2 years. Expert number 5. Raoul Pal. Alternative take. Macro collapse. What if SVB-type banking crisis happens in Q1 2026? What if geopolitical tensions spike? Bitcoin could spike to 200K on flight to safety, but then collapse 80% if the financial system seizes up. The macro is more fragile than people think. Analysis. Black swan risk is real but low probability. Can't really position for it without destroying expected value. So here's the synthesis. Bitcoin hits 150K in January-February, 60% probability, then consolidates or corrects 15-25% in March-April, 70% probability. By EOY, Bitcoin finishes 2026 between 120K, 180K, high confidence. It's not 500K, it's not 30K. It's boring, but it's realistic. What about Ethereum and altcoins? Everyone asks, if Bitcoin goes to 150K, what about Ethereum? The answer is, Ethereum is in trouble. Here's why. The Bitcoin dominance factor. Bitcoin dominance is at 45%. It can go to 50-55% during bull markets. What that means? Money flows from altcoins to Bitcoin. As Bitcoin runs from 97K to 150K, ETH and other altcoins will underperform. This is mathematical. The capital flows to BTC, not to ETH. Ethereum's actual weakness. Ethereum's usefulness as a platform is declining. Layer 2s, Arbitrum, Optimism, Polygon, are stealing transaction volume. The consensus is that Ethereum might not be the settlement layer of the future. L2s are. This doesn't mean Ethereum crashes. It means Ethereum probably 2-3x, from 2.2K to 6-7K, while Bitcoin 1.5x, from 97K to 150K. ETH underperforms on a percentage basis. The alt season prediction. We'll see an alt season where altcoins outperform Bitcoin in April-June 2026, after the Bitcoin correction. That's when you buy ETH, SOL, and other major alts. But right now, January-March, Bitcoin only. Don't get cute with altcoins. What are the risks? What could break this thesis? Okay, so here's where I'm wrong. These are the scenarios that could completely invalidate everything I just said. Risk 1. Macro shock. If the Fed changes course and raises rates back to 4-5%, capital flows from risk assets, including Bitcoin, back to treasury bonds. Bitcoin could crash 42-50% immediately. This is the number one risk. Probability, 20% risk. 2. Regulatory crackdown. If the US or EU bans crypto payments or restricts institutional holdings, Bitcoin crashes. This is possible, but lower probability than macro shock. Probability, 15% risk. 3. Technical breakdown. If Bitcoin breaks below 85K, the bullish case breaks. We'd see 60-70K on a retest. This would indicate the rally was fake. Probability, 25% risk. 4. Crypto winter returns. What if we've already peaked at 99K and we enter a prolonged bear market similar to 2021-2023? This is possible but would require a macro shock. Probability, 30%. So combining all risks, there's about a 50% chance that Bitcoin doesn't hit 150K and instead corrects below 85K at some point in 2026. That's not good odds. That's 50-50. That's casino math. Which is why position sizing is everything. Position sizing and strategy. Okay, so given this uncertainty, how should you actually position yourself? If you're bullish, 60% allocation to Bitcoin. Buy 40% of your intended Bitcoin position now at $95 100K. Hold 30% for a dip to 80.85K, which might not come, but you're hedged. Hold 30% for a dip to 70.75K, even more defensive. This way, you're long, but you're managing risk. You're not YOLOing at the top. If you're neutral, 20% allocation, wait for 120K plus to buy, take profits into strength, or wait for 80K, classic reversal level. Don't buy in between, you're just giving away edge. If you're bearish, 0% allocation. Short Bitcoin at 150K if it gets there. Target 110, 120K on the correction, but watch macro closely. This is high risk. If you're crypto native, rebalance to 50% stables. Take profits. Your portfolio is up 3 to 4x in 3 months. Lock in gains. Rebalance to 50%, BTC, 30% ETH, 20% stables. You're still long, but you've hedged. The mistake everyone makes is all in at the top, then panic selling at the bottom. Don't be that person. Timeline and catalysts. Here's what to watch in the next 30 days. January 2026. Bitcoin hits 150K, high probability. Ethereum hits 4.5K, lagging performance. Watch Coinbase spot ETF flows, biggest indicator. February 2026, potential peak around 150K. Watch Fed language for rate hike signals. If Fed even hints at rate hikes, Bitcoin crashes 25% plus March-April 2026. Correction to 120K expected. This is the buying opportunity for next leg May-June 2026. Alt season, where Ethereum and alts pumps while Bitcoin consolidates. Bitcoin could stay flat while ETH 2x. Final thoughts. So to answer the question, will Bitcoin hit 150K in January? Probably yes. The setup is there. Institutional flows, halving cycle, macro conditions, they all point to 150K in Q1. But the bigger question isn't whether we hit 150K, it's whether you survive the crash afterward. Because here's what history tells us. Every bull run peaks. Every peak is followed by a crash. The only question is, by how much? I think Bitcoin goes to 150K, then corrects to 120K, then recovers to 180K by EOY. That's my best guess. But I'm not betting my life on it. I'm positioned for it, but I'm hedged. And you should be too. Like and subscribe if you found this useful. And let me know in the comments, what's your Bitcoin price target for 2026?